for a lot of Asia, right, there's so many important oil importing nations in this part of the world, China, India, South Korea, Australia. What's the outlook looking like? Because this would pinch their deficits.
Yes, I mean, we've written broadly on the subject of inflation. I think this is probably is better considered in terms of the larger context of overall rising inflation pressures, particularly the spread between PPI versus CPI, so-called producer price inflation less consumer price inflation. So the concern is that when you've got input costs rising, one of which, of course, is oil, but not just oil, other commodities have risen very significantly as well, that what you're seeing is potential margin squeeze for companies. We've actually looked at this in quite some detail, and the key point is that empirically, when you've got a rising spread between PPI and CPI, that typically tends to actually be a good environment for Asian equities. And the key reasons are that the reason why producer prices are rising, of course, is that growth is improving. So if underlying growth is favorable, then companies can generally absorb some of those margin pressures because of the positive operating leverage, which is inherent in better revenue growth. Additionally, just to give you one statistic, if you look at the overall composition of profits, and you break them down between upstream, midstream, and downstream, only about 21% of Asia's overall profits come from the downstream sector. So the better profits you're going to get in the upstream producers, as well as in the financial area, which is not really affected by this PPI aspect, is something that can overcompensate for the margin squeeze that you'll see in the downstream areas. So our overall bottom line here is that the profits for Asia, we still think look robust, and that's the key driver for our constructive market view. Within that, we think that there is a play between upstream versus downstream. And in fact, that's one of the alpha orientation or opportunities that we foresee in the next 6 months.
Region-wise, how would you break that down?
So in terms of our market views, we're overweight China, India, Korea, and Taiwan. So it's kind of like a North Asia bias, broadly speaking. We're underweight Australia and various parts of ASEAN. It's not that we're necessarily bearish on those other aspects. We just think that the outperformance probably is going to be still tilted towards North Asia for the time being. As we look into 2022, that may shift, but for the next 1 or 2 quarters, we still think the opportunities are broadly in the northern parts of Asia, which are more sensitive to the global cyclical recovery which is taking place.